Hi there. We're now going to get started on financial mathematics, and that's all about the finances behind mathematics. No, wait. The mathematics behind finance. That's it. The mathematics behind finance. Now, what do I mean by that? Well, if we look at anything like a car or maybe just some savings in the bank account or anything that has money value. Okay, so money value. Now, that's not really a word, money value. We use the term monetary value. Monetary value. And forgive my spelling, I might be wrong, but you know what I mean. Monetary value is when something has financial value. And though that value might change over time. So for example, if I buy a car for a certain amount, I might not be able to sell it for that same amount, or I might sell it for more or less, depending on what the scenario is. So the value of a monetary value might change, and there's three main reasons why it changes. One is interest. Okay, interest. Interest is when an amount of money grows over time. So for example, you borrow money from the bank to buy a house, but in the end you have to pay back more than you actually borrowed because it earned interest. The second reason why it might increase is because of inflation. Okay, inflation. Inflation is all about prices increasing over time. Now, because banks charge interest, okay, products end up going up in value. Okay, so over time, for example, when I was young, a bread cost 2 Rand. Okay, now a bread is closer to 11 Rand or 12 Rand. So because of time and prices increasing over time, that is called inflation. Okay, and finally, a value might decrease because of a depreciation. Okay, depreciation. Now, depreciation refers to things that lose value over time. So instead of growing in monetary value, it loses monetary value. Okay, that's like if I buy a car, I might have paid for the car 100,000 when I bought it, but when I sell it 3 years later, I'm definitely not going to get 100,000 Rand back. Okay, so it loses value. So 100,000 might only be worth 50,000 in a few years' time, and it's not because of any other reason than the value of the asset or whatever thing I'm talking about has actually decreased over time because of wear and tear and actually just not being a new thing anymore. Anyways, let's just talk about the rate of change. Now, rate of change, that is the percentage with which my values change over time. Rate of change refers to the percentage with which my value changes, and we're going to use an I to represent the rate of change, and this can be for inflation or interest or depreciation. Okay, let me say interest, inflation or depreciation is going to be represented with an I, but what's very important, it will be expressed as a percentage. Okay, so you'll lose a percentage of your value over time. In other words, percent. And please remember that percent means divide by 100. So if we're talking about 8% is the rate at which my savings increase over time, then I'm actually talking about 8 divided by 100. Okay, now with that in mind, we get two types of changes. Okay, so obviously something can grow or something can depreciate. We're going to use growth and decay. Okay, and we can get simple growth, and or decay. Okay, decay just means it decreases over time, or we can get compound. Okay, compound growth or decay. Now, what is the difference? Well, I'm briefly going to explain it, but not the full version. Okay, in simple growth, my growth, I have constant growth. Constant growth or decay. Okay, so if my savings increase with 100 Rand in the first year, it will increase with 100 Rand in the second year. My growth will stay the same. However, in compound decay, I have constant growth or decay rate. Okay, so in other words, this rate stays the same every year, and the rate is calculated just on a different amount every year. So if I had 1,000 Rand in my savings, and in my first year I get 100 Rand interest, then in the new year I'll have 1,100 Rand. And now my interest will be calculated on the 1,100 Rand. Okay, for this one, if I had 1,000 Rand in, my first year's interest is 100 Rand. Yes, I have 1,100 Rand in the account this year, but I still just work out my interest on the 1,000, the original 1,000, while for compound I will work it out on the new value, the 1,100 Rand. But let's leave it there for now, and in the next video we'll look at how do we get to formulas that we can use for these two scenarios. See you in the next one.